Good evening. Thanks for joining us on India Business Hour. I'm Shireen Bhan. The headlines we're tracking for you tonight. The Indian rupee weakens against the US dollar for the second day. The Sensex ends in the red, dragged by IT and metal stocks. The government is keeping a close watch on the monthly trade data. Ministries have been asked to curb non-essential imports and push exports. Imports rose 16% in October, taking the trade deficit to nearly $27 billion. The RBI's Monetary Policy Committee will announce its rate decision tomorrow. The street is factoring in a 35 basis point rate hike as per a CNBC-TV18 poll, but there is some disagreement over the stance of the policy, with some expecting a tweak in the wording. The World Bank revised its FY23 GDP growth projection for India upwards from 6.5% to 6.9%. Cites tightening monetary policy and high commodity prices as factors impacting growth, but adds that India is well positioned to tackle global headwinds. Despite widespread skepticism, leaders in the EU insist that the $60 price cap on Russian oil will curtail Moscow's ability to fund the Ukraine war. Russia's already said it will not comply with the price cap and is ready to cut production if needed. Hackers targeted the website of India's premier medical research institute, ICMR, 6,000 times in the last 24 hours, says a government official. This comes at a time when the servers at the All India Institute of Medical Sciences are not fully restored, 2 weeks after a cyber attack. Vodafone Idea says a bond issue to American Tower Corporation could not be completed and it is in talks to extend the deadline. Says there's been no communication from the union government on equity conversion, which was one of the conditions for ATC to invest. The government holds a meeting with all parties ahead of the winter session of Parliament, which kicks off tomorrow. Opposition demands a discussion on inflation, unemployment, among other issues. 16 new bills are likely to be taken up. After halting advertising on Twitter, General Motors CEO Mary Barra says the company is open to reversing the decision and conversations are ongoing. Walmart's Doug McMillan says they continue to advertise on the platform and will ramp up spending on digital ads. And we bring you a report card of the production-linked incentive scheme to bolster drone manufacturing and the opportunities and challenges being faced by the sector. Well, we'll come to all of that in just a bit. But first up, the market action of the day. The market's ending in the red after the Sensex fell for the third consecutive session. IT and metal stocks remain the major drags. The broader market underperformed the benchmark indices. The rupee, meanwhile, weakened against the dollar for the second day running. The rupee lost nearly 70 paise today, and it's moved closer to the 83 level against the greenback. Now, the rise in India's trade deficit could be one of the reasons behind the fall in the rupee. In October, the trade deficit nearly touched $27 billion due to soaring imports. In a bid to reverse this trend, the government has asked ministries to curb the import of non-essential items. Sapna Das joins us now with more details. Sapna, this is clearly a worry that the government is hoping to fix.
Absolutely. In fact, just a small aside, what we are given to understand is that probably even for the next financial year, many of the top ministries, the economic ministries, are considering the trade deficit as a major challenge to be tackled even in the coming financial year, and that, I suppose, has already started in some way. So if you look at the H1 and up to the October data, it's pretty worrying. Your October exports were actually a negative 8%, wherein your October imports grew by almost 16%, and even year on year, if you look at it, imports are up by almost 42%. Your export growth is just barely around 20%. So the red flags from various the red flag has to come out at some point or the other. Having said that, these are clear instructions given to all the line ministries, which are basically importing more of the non-essential stuff. And they are being told that some remedial measures have to be taken, and the line ministries in line, or rather in their turn, have also communicated this down to the industry, because ultimately the decisions have to be taken by the industry. Now, what these remedial measures could be, there is not too much of clarity at the moment, but I suppose this would mean some kind of cutback on the quantum of exports, the quantum of imports, if not some action to be taken by the government at some point in time, like for example, increasing import duties somewhere, but they'll have to make sure that it is not going to impact their exports, like that happened for the steel sector. They had to actually roll back most of the duties imposed because the steel exports were suffering, and that's exactly what the government is talking about, that line ministries will also have to take care of pushing forward on the export front. So this is what it is as of now. We'll be keeping a close watch on this, and we'll have to keep a watch as to what really comes out, and maybe if some further action is likely to be taken in the coming budget.
All right, Sapna, appreciate you joining us. In fact, staying with that story, based on that import alert list that Sapna was mentioning, the Aviation Ministry has written to the DGCA, the National Aerospace Laboratories and various industry chambers. The ministry has asked them to recommend measures to contain the surge of import of non-essential items. The ministry's letter has highlighted a 56.5% surge in the imports of aircraft between April to September as compared to the same period last year. Imports of turbojets surging by 34%, while helicopters surged by nearly 42%. Well, I don't know if you can qualify these as non-essential, because given the capacity constraints the Indian aviation sector is facing, as well as the rise in demand and traffic, most airlines at this point in time are looking at leasing aircraft. Indigo, Air India, to name a few, have already started to lease additional aircraft to meet the kind of demand that we are seeing. Now, weakening rupee and soaring trade deficit is the backdrop for the RBI's Monetary Policy Committee meeting, and the decision on rates will be announced tomorrow. The street is factoring in a 35 basis point rate hike. That's as per a CNBC-TV18 poll. But there is some disagreement over the stance of the policy, with some expecting a tweak in the wording. Lata joins us now with her take. Lata, what should we expect?
The market has fully discounted a 35 basis hike from the Reserve Bank. Until last week, there was a hope of 25 basis, or rather even a majority. But after the non-farm payrolls came in higher than expected, and the dollar went up and yields went up in the US, the market has moved towards a 35 basis expectation. The real disagreement is over what will the stance be. The current stance is withdrawal of accommodation, which means we are in hiking mode. We are removing the easy policy. Now, if they change it to neutral, that will mean that we have hiked enough, and now we may hike or cut or pause. The RBI may not want to sound that dovish when things are still uncertain, when we don't know what will be the terminal rate in the US. Expected that the Fed could be in hiking mode for longer and stay high for a very long time. Therefore, the expectation in the market is that they will retain the withdrawal of accommodation stance and say that we will henceforth be entirely data dependent. So some tweak to that sentence, either in the policy statement itself or in the press conference, is what is expected. But just one doubt, there are two external members in the MPC, Jayant Verma and Ashima Goel, who are sounding very dovish in last time's minutes. So to placate them, whether a 25 basis will come or whether it will be a divided vote, is one doubt that the market has. But if it is 25, there is a rally in the bond market.
Okay, 35, 25, change in stance or not, you can catch the action right here on CNBC-TV18. We'll be live with the RBI credit policy. Now, here's a big newsmaker this evening. JP Morgan's Jamie Dimon says inflation is eroding consumer wealth in the US. Speaking with CNBC, Dimon said this erosion in wealth could cause a recession next year.
The consumer is spending 10% more than last year and 40% more than pre-COVID. They're spending it in different things, so all your speakers up here, some are doing better, some are doing worse. That's a tremendous sum of money, and they have $1.5 trillion still in their checking accounts, more than pre-COVID. So the spending is down. Inflation is eroding everything I just said, and that $1.5 trillion will run out sometime mid-year next year. And so when you're looking out forward, those things may very well derail the economy and cause this mild or hard recession that people are worried about.
Well, that's Jamie Dimon. Now, the World Bank has revised its FY23 GDP growth forecast for India from 6.5% to 6.9%. The World Bank has cited tightening monetary policy and high commodity prices as the key factors that impact growth. It also expects the inflation rate to come within the RBI's tolerance band of 2 to 6% by the first half of FY24.
Our projection, as you said, is 7.1 for this fiscal year. Our projection for the next fiscal year is 5.1. So we're expecting inflation to come back within the tolerance range of 2 to 6%. A part of that is a reflection of our assessment that food price pressures will ease over the next few months.
Yes, India has a space to use the budget to achieve high growth. So we talked about the PLI. Now, the PLI is a budget measure. It gives incentives to firms, so it has fiscal implications. It means foregone revenues, or maybe it means direct outlays in some cases. But the government can do more, the budget can do more.
Maruti Suzuki India has recalled over 9,000 cars manufactured in November due to a possible fault in the seat belts. The models that are set to be recalled include the Ciaz, the Brezza, the Ertiga, the XL6 and the Grand Vitara. The automaker says it suspects a possible defect in the shoulder height adjuster assembly of the front row seat belts, which could lead to disassembly. Some positive forecasts coming in for the aviation industry. The International Air Transport Association expects the global airline industry to turn profitable in 2023. If that happens, it will be the first time that airlines will see profit since the COVID outbreak. However, 2022 will continue to be a year of losses, with airlines expected to post losses of $6.9 billion. That's lower than the $137 billion loss recorded in 2020. Layoffs across corporations continue. FMCG giant PepsiCo plans to trim its workforce by hundreds across its North American snack and beverage units. In an internal memo accessed by the Wall Street Journal, the company has described the layoffs as an act of simplifying the organizational structure. India's premier medical institutions have been facing a barrage of cyber attacks in the recent past. Today, a government official told CNBC-TV18 that the website of ICMR, India's premier medical research institute, was targeted 6,000 times in 24 hours. This official also claimed that the attacks were not successful. Now, 2 weeks ago, hackers attacked the All India Institute of Medical Sciences. The servers at AIIMS are yet to be fully restored. Sources claim some online services are now up, but servers are yet to go online. Hospital authorities have been struggling with manual enrollment of patients, and they are unable to access patient records. An investigation into the AIIMS cyber attack is already underway. Ashmit Kumar joins us now with more on the cybersecurity concerns for India's healthcare sector. Ashmit.
Well, it's nearly been 2 weeks since the cyber attack on AIIMS Delhi servers, and we're not much closer to an answer to the following questions: who, why, and how. Now, the cyber attack was mounted on AIIMS Delhi servers, both main and the backup servers, on November 23rd. The problem was discovered when staff at AIIMS tried to log into the e-hospital application. Now, with chaos for both patients and doctors alike, the services were moved to the manual mode. Now, important to establish what's at stake here. We're talking about medical profiles and records of nearly 4 crore patients. That's more than the population of Canada. Now, the data that could be leaked is sensitive and consists of personally identifiable information. Moreover, AIIMS Delhi plays host to hundreds of senior political leaders, ministers, bureaucrats, and institutional heads for treatment. Data leaks compromising senior government functionaries could pose a national security risk. Now, investigations are on in full swing. The likes of Delhi Police, CERT, Indian Cybercrime Coordination Center, and even the MHA and the NIA are looking to resolve the issue. But here's where the developments turn even murkier. What is the intent behind the attack? Well, for one, the infected files have a message, and I quote here: "What happened? Your files are encrypted. What is the price to repair? The price depends on how fast you can pay us. After receiving money, we will send program and private keys to your IT department right now. Do not attempt to decrypt your data after using third-party software. This may result in a permanent data loss. Our programs can repair all files in a few minutes, and all servers will work perfectly, same as before," unquote. So is this a case of ransomware? Well, on November 23rd, AIIMS had issued a statement suggesting that it may be a case of ransomware. Reports also seem to suggest that infected files have been encrypted by the attackers and that they are now seeking payment in Bitcoin to unlock these files. The FIR that has been registered also invokes Section 385 of the IPC, which pertains to extortion. However, on the record, the investigating agencies are denying any ransom or negotiation attempts. Now, initial assessments point towards several red flags. It would appear that no measures were in place for securing systems. Certain findings indicate that there were not enough policies on firewalls and that most switches were unmanaged. But is this merely the tip of the iceberg? Well, just days after the AIIMS attack, as many as 6,000 attacks were mounted in less than 24 hours on ICMR. Attacks were unsuccessful and were managed by security systems. Now, security experts warn that with growing digitization, the frequency and severity of such attacks are only expected to grow, and that the public digital assets and data could be most at risk.
Today morning itself, I was in the All India Institute of Medical Sciences, and it's a ransomware attack. No doubt, the files have been encrypted there. But the solace is that the good point is that the entire data has been in a separate server. Somehow the attack could not reach there. The data is safe and data is being reloaded there. The machines are being changed. I saw some of the machine functioning there. Now, I think in a day or so, they will put it back for the online record there.
Well, that's the latest in the AIM cyber attack case. After halting advertising on Twitter, General Motors CEO Mary Barra says the company is open to reversing its decision. Speaking with CNBC, Barra said the GM paused advertising to understand what the philosophy of Twitter will be under Elon Musk. On the other hand, Walmart's Doug McMillon said they will continue to advertise on Twitter and are looking to ramp up spending on digital ads.
You recently paused advertising on Twitter, which is now owned by Elon Musk. Can you explain that decision? Was that to punish Elon Musk and Tesla? Was that because of brand safety? And what are your longer-term plans as one of the largest advertisers in the country about advertising on Twitter?
Well, we pause, which I think anytime there's a major change in a company, we look to make sure we understand what the new philosophies are going to be. Our teams are having conversation. And you also have to remember it's also a competitor, so we want to make sure our advertising strategies, are kept confidential. So the teams are having ongoing conversation.
You're a large advertiser. Where are you advertising? What's shifting? What are you seeing working? What's not working?
Yeah, one of the most interesting things that's happening is how commerce and advertising are coming together. Social commerce is really growing. We certainly saw that happen in China in a big way with our business there, and now it's happening everywhere. So we think a lot, and actually we're growing an ad business, as you probably know, think a lot about how commerce and advertising work together on various platforms. And we want to be there. We want people to be on the Walmart app, but we also want to be wherever they want to shop, wherever they want to learn about merchandise.
But in terms of your spend, how is it shifting?
It's more digital.
It's more digital, but is it more Facebook, Insta? Is it more TikTok?
I think it's all the above. Like
Snap? Like what are you looking at going? Is Twitter working for you? Is it not working for you? We just talked to Mary Barra. They had paused their program.
We're watching that closely, and what our team does.
Are you guys still advertising on that platform?
We are.
And have you paused?
We have not paused.
Okay.
We've moved to more digital investment, and across platforms, it's a very fluid investment based on what's happening with current results.
Well, global corporations, they're reacting to digital advertising and, more importantly, whether they are continuing to advertise on Twitter or not. Time for us to head into a short break, but up next, a report card of the production-linked incentive scheme to bolster drone manufacturing. That and more when we return. The 17-day winter session of Parliament begins tomorrow. Ahead of this, 31 of the 47 parties attended an all-party meeting convened by the government to discuss the agenda. Opposition parties raised the issue of unemployment, price rise and the EWS quota. Meanwhile, the government assured it is ready to debate on all matters. The winter session will go on till the 29th of December and 16 bills are expected to be introduced. The report on imposing GST on online gaming is still not ready, as and unlikely to be tabled before the next GST Council meeting. That's the word in from the GST Council member from Goa, Morvin Godino. Speaking with my colleague Timsy Jaipuria, Godino said a lot of issues on taxing online gaming are yet to be addressed.
We had our last meeting and we said it is the last meeting. In spite of everyone's concerted effort to have a consensus, it did not emerge. Let us be frank. Because these are very complicated issues, and comparing online gaming to horse racing and then also comparing it to casinos is like comparing oranges and apples and some other fruit altogether. Now, having said that, nevertheless, these issues have to be resolved. They will attain closure, but not in the near future. Of course, the 17th meeting, it will depend on whether the GOM report is presented or not. It will all depend on that, but to my knowledge, that has not been done as yet. Only when the report is presented, then it is there available for the GST Council to take a call and take an appropriate decision.
So when it comes to appellate tribunals, that is also something that is very crucial. Industry has been demanding that appellate tribunals should be set up as soon as possible. What is the consensus there on that, GOM?
I think that we have been very clear. We have submitted the clear report where there was a consensus, and it is up to the GST Council in the forthcoming meeting to accept it.
Do you see that in next 3 months we'll have appellate tribunals across India in each and every state with a proper judicial member, with a proper legal member and all?
I think that is the endeavor of all of us, and having decided very emphatically in the last GOM meeting about the appellate authority, I don't think that would be a problem.
Well, the big national story, Belgavi is the epicenter of fresh tensions at the Maharashtra Karnataka border. State buses, trucks and lorries from Maharashtra were attacked by pro-Karnataka activists and prevented from flying in Belgavi and Nipani. Maharashtra ministers who had been appointed to coordinate the dispute resolution with Karnataka have postponed their visit. The border dispute dates back to the 60s, since the reorganization of states on linguistic lines. Maharashtra has been laying claim over Belgavi, which was earlier part of the Bombay presidency, on the grounds that it has a sizable Marathi-speaking population. Karnataka has rebuffed Maharashtra's claim. The dispute is pending before the Supreme Court. Kaneshwar Salonke from News 18 Lokmat reports from Belgavi.
महाराष्ट्र और कर्नाटक में काफ़ी तनाव की स्थिति निर्माण हो चुकी है। मुख्यमंत्री बोमई ने महाराष्ट्र के जत तालुका में अपना हिस्सा मांगा। इससे चलते बहुत सारी राजनीतियाँ गर्म हो चुकी है। उसके बाद जो बहुत सारे विवाद के वक्तव्य आ गए, उससे चलते काफ़ी तनाव दोनों राज्य में आपको दिखाई पड़ेगा। यहाँ देख सकते हैं, मैं अभी कोगनोली बॉर्डर में हूँ, जो महाराष्ट्र और कर्नाटक की बॉर्डर है। यहाँ पे बहुत सारे पुलिसकर्मी बंदोबस्त के लिए खड़े देख रहे हैं, क्योंकि बहुत सारी तनाव की परिस्थितियाँ हैं, सीमा भागा में दिखाई जा रही है। आज भी कन्नड़ रक्षण वेदिका में बेलगांव में प्रोटेस्ट किया, महाराष्ट्र सरकार के खिलाफ उन्होंने आंदोलन किया। बहुत सारे महाराष्ट्र व्हीकल को भी टारगेट किया। इससे चलते यहाँ कोगनोली टोल नाका में भी शिवसेना जो उद्धव ठाकरे की गढ़ के है, उन्होंने भी यहाँ पे आके प्रोटेस्ट किया। इससे चलते तनाव की स्थिति बॉर्डर में अभी भी दिखाई दे रही है। इसलिए महाराष्ट्र और कर्नाटक दोनों ही सरकार ने बॉर्डर पे बहुत सारा पुलिस बंदोबस्त है वो यहाँ पे तैनात किया है, और कर्नाटक और महाराष्ट्र के बॉर्डर में अभी तनाव की स्थिति यहाँ दिखाई आ रही है।
Now, India is pushing growth in the drone ecosystem. Apart from increasing the weightage given to indigenous manufacturers and component makers in the defence procurement sector, the government announced a production-linked incentive scheme with an outlay of 120 crore rupees. With operational guidelines for the scheme being announced, CNBC-TV18 Shreya Gautam takes a look at the opportunities and challenges that drone and drone component manufacturers are seeing.
Drones like this one are touted as the next big thing. A market research future report says that the global drone market, currently valued at over $45 billion, is expected to grow at a cumulative average growth rate of 13% by 2030. And India has big plans to be a part of this growth. It wants to house a $1.8 billion drone industry by 2026. That's where its 120 crore rupee production-linked incentive scheme comes in. A little over a year since the scheme was first notified, operational guidelines have been finalized. And that's good news for the 12 drone manufacturers and 11 component manufacturers who have been shortlisted over 2 rounds of applications.
If you look companies like us, or matter of fact, bigger players like IdeaForge or Esteria, which is Reliance driven, or Adani's, with their systems, people are investing. We ourselves are investing close to 50 crores in setting up a separate facility right now.
By March 31st, 2023, we would be able to manufacture and sell at least 2,000 to 2,500 drones.
But challenges abound, the biggest by far being stiff competition from China. In February, India banned the import of drones and limited imported drone use to R&D, defense, and security purposes. It also allowed free import of drone components to help Indian assemblers and drone makers. Even so, players say achieving milestones will take time.
Though we say we have more than 300 plus drone company in India, but unfortunately, it's the assembly people who are actually outsourcing items and bringing and assembling them. So turning into a pure manufacturing hub and seeing those investments, we should look at 5 years down the line.
The Defense Ministry is also helping. It has increased its preference for indigenous drones. However, players say the large and rapidly growing consumer-centric market is proving tough to crack because of the cost advantage enjoyed by Chinese players.
Most of the defense tenders that we've seen, they're clearly mentioning that they want made in India drones, or they have a strong preference for that. So selling to defense, it has not created much difference. But in terms of selling to consumers as well as for semi-professional work, it has created, it's very difficult right now for Indian companies to match that kind of price point.
Drone smuggling is also hurting.
If you look at the number of illegal drones that are there in the market, it would be more than 7 to 8 lakh drones. But the number of manufacturers that are there in the country are hardly anywhere between 75 to 100, and out of which less than 20 to 25 of them have been granted PLI access.
Measures to streamline the bureaucracy have only had limited effect.
We are right now in a phase where the approved drones by the government, the tally stands at only 5, out of which 3 are agri drones and 2 are general purpose training drones. So, and the number of applications that have been resubmitted with the total number of companies will be more than 30, which are going for resubmission again and again. And so this is taking a lot of time.
The government hopes that the PLI scheme will attract 5,000 crore rupees in investments and create 10,000 jobs. These are key to meeting India's target of becoming a drone manufacturing hub by the year 2030. Industry says that the government is showing its intent through policies and schemes. But the flight path promises to be a tough one, given India's drone market has seen revenues of around $20 million in 2022 compared to China's $1.2 billion. In Mumbai, Shreya Gautam.
And with that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Stay tuned. The news continues right here on CNBC-TV18. And don't forget to tune in tomorrow. It's going to be a very special milestone for us here at CNBC-TV18.
CNBC-TV18, celebrating 23 years of business leadership.